Welcome to all. David, I'd love to start kind of with the macro view here. You know, when the Fed cut rates, it's a week and a half ago, the debate there was, oh, it's a close call, 25 or 50. It's also a close call as to whether the Fed is a little bit too late or right on time. Economic data since then has seemed, on a net basis, pretty reassuring.
Very much so. I mean, first of all, if you look at all the GDP revisions and the data we got this morning on consumer spending and inventories, durable goods, trade, overall, it looks like we're heading for about a 3% quarter. I'm getting 3.1% for the third quarter. So that's very reassuring. We've got plenty of momentum. But also, if you look at those revisions, they show the saving rate wasn't as low as people thought. And we've had a huge increase in wealth. And this increase in wealth, 16 straight months of real wage gains, there's a lot behind consumer spending. There's a lot behind, corporate profits also revised up. There's a lot behind corporate spending. So I see plenty of momentum in this economy, with or without Fed rate cuts last week.
Yeah, those revisions certainly send the message that we were not as close to stall speed perhaps as we thought, and maybe consumers were not nearly as sort of tapped out as was expected. But all those things you just listed, right? 3.1% real GDP pace right now, huge wealth gains in recent years. Is that compatible with a Fed that seems pretty aggressive in terms of trying to become more supportive?
Yeah, because the thing is, this economy was never that inflation prone. I've had a hard time the last few years, defending that point. But the reality is we got hit by pandemic, supply chain issues, Ukraine. But as all that has faded, inflation's coming down. In fact, this morning's number, 2.2% year over year, and the consumption deflator is very good. But as we look at the numbers for September, we think we're going to hit a 2.0% number on the consumption deflator year over year for September. So the Fed can essentially say mission accomplished.
Yeah.
Now, I don't think they did all the work here. I think that's to the nature of the economy. But it looks like this economy can actually tolerate pretty strong growth, pretty strong demand from consumers and from businesses, and still have the inflation rate come down to 2%, which is a pretty good backdrop.
Yeah, and Warren, that obviously would be the ideal scenario, maybe one that you can't fully put your faith in, but I know you've been kind of sticking with the soft landing outlook as well as believing that, stocks can continue to add on from here. What about now with the S&P up 20% and we're kind of rebuilding that general confidence in the soft landing premise?
Yeah, I mean, soft landing has been our base case for over a year now. And I just don't see anything to dissuade us from that. I mean, we've always said there's three real components: resilient economy, rapid disinflation, and a hyper-reactive Fed. And I think that the September decision to cut rates by 50 basis points, for better or worse, it's definitely a Fed being hyper-reactive. And so I think the soft landing is base case. And it's just a matter now of how much of that is already priced into the market. My view is that even though we've had such a big run up this year, as we stand at the doorstep of Q4, it's kind of crazy, but strategist forecasts relative to where the market's trading right now are the most bearish they've been on record for as long back as we have that data for. Strategists have like a year-end target of 54.83. That's the median. So they're like 5% below the S&P 500. We've really never been positioned like that coming into a Q4. Only 5 other Q4s where we've had this kind of relative bearishness from strategists, and basically every other case, the market ends the year up, and sometimes quite significantly. So despite all the move we've had, despite the valuations, and I can definitely go down those kind of negative rabbit holes, despite all that, I don't see the conditions in place for a top. So we'll check back in at the end of the year and see if sentiment gets more frothy as people reset their 2025 estimates. But yeah, soft landing, I still think there's upside towards the end of the year here.